All right, good afternoon, everyone. I'll let some of you get joined in here, but I'm just going to do a few housekeeping announcements before we get started. So thanks for joining us today. We are going to be recording this webinar, and it'll be on the ISAC website after this. Carrie is going to take questions throughout her presentation, so I'll be keeping an eye on that, and she will get them answered as we're going. I also wanted to give you guys a notice that we have planned a second webinar to this on February 27th. That's a Thursday from 1 to 2:30. So I'll be sending out emails about that as well. So keep an eye out for those and you can get that on your calendar if you'd like to attend. But now I'm going to hand it over to Carrie and she will get us started.
Thanks so much. So today, folks, what I thought I would do is do an overview of the county budget, some of the statutory items that you need to be aware of, budget timelines, what are the roles of the different parties involved in the budget process, funds and expenditure classes, what are the property tax rates that are available to counties, and then just sort of a walkthrough through the process, the steps that are involved, and then also demonstrating the software. So if you've done the county budget before, this may be a little bit basic for you if you're quite familiar with the sort of the rules and regulations with county budgets. But if you're new and if you're looking for a refresher, and like an overall understanding of the budget and the process, then this hopefully will be helpful to you. As she mentioned, go ahead and ask questions, post them in the Q&A as we go. And she'll share those with me, and I'll go ahead and try to answer them, as they're fresh in your mind when I'm talking about a topic that you have a question about. I will send over my PowerPoint to ISAC so they can share that as well and have that available with the recording of the video. So first thing, I want to talk about just the budget process at a very high level. What are the general timelines that we're talking about? And of course, you guys and your counties have already started the budget process. In the fall, that's usually when folks start taking a look at some of their major upcoming projects or tentative budget proposals for the next fiscal year. Usually in November or December, the auditor or a budget director we'll send out some budget worksheets to departments and elected folks to find out, get them thinking on their proposed revenues and expenditures for that next fiscal year. A county compensation board, if there is one in place, which there was some legislation that made some changes to the county compensation board, depending on which way your county wanted to go. But that part of the process has also involved regarding salary changes for elected officials. County auditors, then, a very important part of setting a budget is determining your tax rate. And you do that by knowing the property value that you're going to be applying a tax rate to. And county auditors obviously are very involved in that process and certify valuations to Department of Management and to all the other property tax entities by January 1. So all counties have already done that, and that's in place. County departments submit their budget proposals as far as expenditures and revenues. All that information is gathered together and provided to the folks that are, of course, making those decisions on the budget, your Board of Supervisors. You do have to do two hearings related to your budget. The first is a proposed tax hearing. And again, I'm going to go over this in a little bit more detail, but this is sort of your broad overview of the process. You do a proposed tax hearing, you publish notice of that. There is a mailing that's sent to all taxpayers to alert those taxpayers about your hearing, as well as your school and city hearing if they're a city resident. and that's done by March 15th. And that is a mailing that county auditors are involved in. So if you didn't do that last year, it's something that you'll be involved in this year. And again, we will cover that in a little bit more detail as we get there. And then, of course, you have this first hearing for taxpayers. This is an opportunity for your residents to be heard on any sort of objections to or arguments in favor of the county's proposed tax. And this hearing is held no earlier than March 20th. The regular notice of public hearing and budget summary is published not less than 10, no more than 20 days prior to the hearing. And so this is the hearing that's going to be on your full budget. The hearing is held for those taxpayers to speak to any part of your budget. So this is where they, would see your proposed expenditures and your proposed other revenue, and again, the budget in full. The board then, your board of supervisors adopts the budget. Following that hearing, the budget is adopted by resolution. And this needs to be done by April 30th. So again, sort of big overview of how you get to the actual budget. Then after the budget is adopted, your citizens have until May 10th to file a budget protest. So to an adopted budget, they can circulate a petition and file a protest. County auditors then come in and they certify the county budget as well as all the other budgets in the county, the city budgets, the township budgets, et cetera, et cetera. And when we referenced that February 27th workshop that we're going to do, that's a webinar we'll do, that is really about the budget certification process specifically. So we'll definitely delve into that at that time. Then once the county auditors certify all those local government budgets, Department of Management finalizes those budgets. We take a look and finalize those property tax rates and communicate that to county auditors so you know the legal certified rate for all those different entities. The county auditor then, of course, gathers that information and provides the tax list to the county treasurer by June 30th so they can then, prepare those tax statements. And going back to the county budget, the Board of Supervisors appropriates by resolution the amounts necessary for each of those county officers and departments that will be needed during that fiscal year. So that sort of comes around to, okay, now the fiscal year started and the budget is now the current year budget. So let's talk a little bit about the different roles that come into play here. So the role of Department of Management, and if we're talking about county budget, that's me. I'm your Department of Management contact on your county budget. And we provide the forms, we provide instructions, we provide technical assistance for all the local government budgets. So if you have a question about how to complete the county budget, software question, or I don't understand what this is asking me for, any of those types of things, certainly follow up with me. What I have listed here is the link for the county resources page. And this is the page that you go to for all the related county information that you might need to access. So it's a good page to bookmark. So again, DOM role, we provide the forms and we help you complete those forms. That's sort of our role at the outset of the budget process. Department roles, of course, they are required to provide the budgets, the estimated budgets for their various departments. So they're going to say, okay, these are proposed expenditures for the next fiscal year, and this is, the revenues that we anticipate getting other than property tax. So here's our expenditures, here's our other sources of revenue. And this is what we're looking at in the upcoming fiscal year. And then of course, property tax is intended to fill the hole that's needed between whatever the adopted expenditures are and other sources of revenue. And then, of course, the county auditor is the one that usually ends up, or a budget director usually ends up sort of compiling all that information and providing it to the Board of Supervisors. The supervisors then are going to, work through the process. They're going to reach out to different departments. I know a lot of times there may be presentations that departments do to the Board of Supervisors so they can answer questions regarding their their requests or their expenditures. The county supervisors are the ones that set the hearing dates and they conduct those public hearings. After the budget is adopted, it is adopted or approved by resolution of the board. And then, of course, as I mentioned earlier, the board is who kind of compiles, it and determines at the when we're ready to get into that fiscal year, they make that appropriations resolution to appropriate the revenues as needed and the expenditure abilities to each of those different departments. And there's not statutory specificity on those resolutions. So you may see a little bit of variation between counties as far as how much detail is in those appropriations resolutions. And so if you have questions, it's probably, always a fair opportunity to kind of reach out to other counties and look for some examples on those resolutions. You can obviously take a look at what's been done in the past too in your county if this is a new process for you. So the county auditor's role, the county auditors and budget staff are just involved in a lot of different parts of this process, as you can imagine. The county auditors or county auditors staff also, as I mentioned earlier, certify all local government budgets, and they also certify the county budget. So I would recommend, to the extent possible, if you are, the county auditor and you're involved in the specifics of the adoption of the budget itself and, those uh, various deadlines and things that need to be met to get to the adopted budget, that you have someone else in your office actually be the one that certifies then that budget. So a separate set of eyes to actually certify the budget if you were the one involved in, the detail of the budget process. It just gives, as I mentioned, another set of eyes and a little bit of division of responsibility there. And then after the county auditor certifies, then Department of Management comes in and we finalize those budgets. We certify the property tax levies by tax district. Um, and we do, by June 15th, send or more like alert county auditors that they can go in for each budget type and download a one-page, what we call a certification or a tax cert. And it's basically the summary of the tax asking and the tax rates for each and every taxing entity. All your cities get one, all your schools, et cetera, et cetera. And it's found within our system. And again, when we talk about certification, we'll talk about that in more detail. But DOM, again, we're just double checking that the tax rates and amounts are within the statutory limits. So that's kind of an overview of everybody's roles in the process. And one thing you've probably noticed, there's not a whole lot of flexibility in the budget process as far as when things need to get done and what needs to get done when. It is a very statutory process laid out in code, but we are here at DOM to kind of help you navigate those different deadlines and understanding of the different roles. So I'll take a few moments now to talk about the different types of funds that counties have. So digging more really into the budget itself. So counties are fund-based. This is essentially one way to think about it maybe is that you have different buckets which your monies go into, and they're accounted for separately in those different buckets. And each of that bucket is looked at for its own sort of resources and requirements and what's going in and out of that bucket. What is the fund balance at the end of the day, the revenues and the expenditures. So you have these different buckets of your accounting system, and there's pretty strict rules on whether or not money can go in or out those buckets or in between those buckets. So it's just a different, if you're not familiar with governmental accounting, or fund accounting. It is a little bit different than, say, a private enterprise might operate. So counties have funds that are governmental or budgetary funds, and they have non-budgetary funds. When we talk about budgetary funds, really we're talking about the funds that the Board of Supervisors is going to control within their budget that we're adopting, that we're putting together. So these are the funds that the Board of Supervisors, um, that they manage and that they control via the budget that they adopt. So you have general funds, special revenue, capital projects, debt service, permanent funds, and governmental activities, which is really we're referring to government-wide reporting. And that usually comes into play when you look at your your financial reporting via your audit. You also have non-budgetary funds. So when we talk about non-budgetary funds, we're really talking about those funds that are not considered reportable within the budget that we're adopting in this case. So fiduciary funds, and you'll see this referred to as agency funds. These are really the funds where the county, so the county auditor's office, budget director's office, they might be serving basically as the fiduciary or the accountant for funds that are under the control of a different board. So a good example here is the county operates an agency fund for the county assessor's office. Now, the county assessor adopts their own budget. They have their own tax levy. They have their own board, the conference board that adopts the budget and says, these are the expenditures, this is our revenue, our tax rate, etc. So the county is really serving as an accountant for that fund. It's not under the control of the Board of Supervisors, but it is run through the county's books. It's not part of the county budget, not part of the supervisor's budget. The county may also have proprietary funds. An example would be an enterprise fund. These are a little less frequently found in counties, but it's sort of a business type activity that the county runs where the funds of that activity are intended to offset any expenditures. And you might also have internal services funds. And the biggest example there would be a self-insurance fund. So if we talk about governmental funds in a little bit more detail, your largest fund, the sort of most flexible fund that you have, of course, is your general fund. It's your chief operating fund of the county. All your general tax revenues go there. Any types of fees and other types of of receipts that are not allocated by law or by contract to some other fund are going to be accounted for in your general fund. And this is where you pay your general operating expenses. Special revenue funds are those where there are specific sources of fund that are required by law or by regulation to be accounted for in separate funds. So they're usually restricted in use and for expenditures for specific purposes. And there's a variety of different special revenue funds that you might have as a county. Capital projects funds, these are optional funds. Most counties probably do operate at one time or another a capital projects fund. It's used for acquisition or construction of major capital facilities and assets. So say the construction of a building, this would be an example. If we're talking about routine purchases of capitalized items, so maybe like vehicles, those are typically budgeted for and accounted for in the general fund. So you got to kind of look at what the actual project is. But if it's sort of a capital need or capital asset, like I said, like a building, then that would probably be accounted for in your capital projects fund. Debt service funds um, are those funds that are where you would report and account for the payment of interest and principal on any long-term debt, except in a case where it's supposed to be paid from another fund. But if you issue, say, a general obligation bond to do some like a bridge work or something of that nature, then the annual principal and interest payment that you make to service that debt would be accounted for in the debt service fund. Permanent funds, these may or may not be used in any county in particular. They're really for accounting for resources that are legally restricted so that only the earnings and not the principal are used to support a particular program. The best example I could think of with this, and this is more of a city thing rather than a county thing necessarily, but you have cemeteries that are perpetual care, and so those are, if a city, for instance, would have that type of a cemetery that's a perpetual care cemetery, you would pay for the maintenance of that cemetery with the interest that's earned on that fund. So that's just an example. And again, you as a county may or may not have any permanent funds that you're dealing with. And then governmental activities, this is really for your government-wide financial statements, and it's only reported typically in that audit, and it's not something you're going to see necessarily within the budget itself. Again, you have non-budgetary funds, not part of the Board of Supervisors budget. Agency funds, like I said, anytime that you're serving as the accountant for another organization. I mentioned another governmental unit when I was talking about assessors, but you also have, 28E entities that you might be a fiscal agent for instance. So you as a county, are going to have some agency funds. So if you're not familiar with what your county, who your county is serving as a fiscal agent for, that might be worth taking a look at and seeing that information. Enterprise funds, we talked about that already. It's sort of a business type activity. Internal services fund, this is really the best example is self-insurance. And if you're not aware of whether or not your county is self-insured, you might want to dig into that a little bit. It's sort of a narrow circumstance, but if you don't know whether or not your county has an internal service fund, you'd want to do some investigating.
Question,
So,
woman.
yeah,
It says we are going to be selling bonds for a major road project.
uh-huh.
Should the money we receive from the bonds be put in a capital project fund so we can keep track of it?
So oftentimes proceeds of debt are for major capital projects and are received into the capital projects fund. If we're talking about road related expenses, there is a capital projects line. I can't think of what it is exactly, but there is one that's specific to road construction. So yes, I would say that does make sense. And then going to our sort of next category of funds, when we talk about special revenue funds, again, these are restricted in use. And you see sort of when you look at your budget, you'll see a category of special revenue funds. So one is your rural basic fund, and this is restricted in use because it's intended to benefit primarily your rural residents, those that live outside of city limits. So you have a rural basic fund and you have a rural supplemental fund. So your rural services supplemental fund, your county may or may not be using that in any given year, but it's essentially restricted in use to specific purposes. So if your rural basic levy is insufficient, you can additionally use the rural supplemental for certain things like FICA IPERs and unemployment premiums associated with those folks that are paid out of the rural basic fund. And sort of a narrow option for the rural services supplemental is if the county contributes to an aviation authority. Another special revenue fund is the secondary roads fund, and this is the operation fund for the maintenance and repair of your secondary roads, bridges, and that sort of thing. Um, into that fund, it is a special revenue fund. Revenues from the road use tax fund, for instance, go there. Farm to market revenues, which is also coming from the state and sort of that road use tax fund source from Department of Transportation. And you also receive revenues into the secondary roads fund via transfers from general basic and rural basic. So those are sort of in general a summary or description of the major funds or buckets of a county. So when we talk about those major funds, then we also look inside those funds and say, okay, well, what are the different types of expenditures that counties make? And in the budget summary, if you looked at a budget, you'd see a summary page and it reports expenditures by different classes or functions. And within those classes and functions, there's different programs, and then programs are comprised of different activities. When you're sort of not sure where a new activity or an existing activity is going to fall as far as classification, the best resource for you, of course, is the Uniform Chart of Accounts. This is a document that's found, it's usually updated annually, and it's found on that county resources page that I mentioned earlier. You can always go there if you have, a new expenditure that you're not sure where it would fit. That's a good first stop, and it does help you sort of develop those accounting methods to account for different expenditures. So when we talk about those different functions or classes of expenses, the first one would be public safety and legal services. Pretty straightforward. Of course, this would be county attorney and sheriff's office, that sort of thing. Physical health and social services, again, pretty straightforward there. What would be going on in that service area 3? County environment and education, you'd have, your various different types of, you'd have your library and any of those types of things. Roads and transportation, that's where your secondary roads types activities are going to be occurring. Governmental services to residents, that's where you'd have the costs of, say, like the treasurer's office and the auditor's office. Administration is your board of supervisors primarily, and non-program and other budgetary financing uses, that's where you'd get into your, things that don't fit in other ways. So that's where you see some of your capital projects type expenditures coming into play and other things as well. Again, for a good summary, and actually a lot of detail, you'd go through that chart of accounts document. If you're ever questioning where something lands within your budget, the source of all those different lines in your budget is the chart of accounts. They all sort of roll up for reporting purposes to those lines in your budget.
Mary, we had a follow-up on the question from earlier.
Yeah.
It says if we put it in the road capital project section on the budget form, we cannot keep track that those monies are being spent for the project or not.
I'm not sure I'm following. They're saying they can't, or let me see. If we cannot keep track that those monies are being spent for the project or not. I'm not quite, I mean, you can always, if there's a concern or, if you're wanting, like in the budget form, obviously all the information is sort of rolled up to a higher level, right? But within your own accounting system, if you're wanting to, specifically track, you can always add a project code. So a little, couple digit number to different revenues and expenses if you're wanting to be able to say run a report on, a particular project. Now you might not see that level of detail on the overall budget form because there's just, not that level of space for that level of detail on the county budget form, but within your own accounting and reporting, you could pull greater detail. And hopefully that helps answer the question. If not, they can follow up with me directly.
Perfect, thank you.
Okay, so we'll talk now a little bit about tax levies and tax rates. And as far as those go, I want to start out first, making sure that we're all sort of on the same page with how a tax rate is calculated. So, as I mentioned earlier, all counties have submitted their valuations, and so these are the valuations that are going to be used to determine the tax rate for the county budget. And so it's all that property value in the county added together, right? All the value of all the businesses and homes and land within the county. And of course, the valuation itself is determined by the assessor and Department of Revenue, depending on what kind of value we're talking about. So valuation is determined, and then before it gets taxed, if there's an assessment limitation that is applied to that sort of assessed or market value of property, and it is applied by class of property. So, for instance, residential value traditionally in the last several years has been taxed, has an assessment limitation, so it ends up being taxed at about around 50 or so percent of its assessed value. So a $200,000 home, for purposes of taxation, you'd apply that assessment limitation of about 50%. So about $100,000 would be what the tax rate would apply to. So you add that all together, apply all the assessment limitation to all that value, and then to determine, what the tax dollars are, you take that taxable valuation, on a broad amount by, countywide, for instance, divide that by 1,000 and you multiply it by a tax rate. The tax rate that's been determined, say $3.50, $6 and whatever. That is what you determine locally, and then that will generate the taxes levied or the amount of property tax dollars that would be as part of the budget. When we talk about property tax, it's very important to reference this piece of statute. A county cannot levy a tax unless it's authorized by state statute. So you cannot, as a county, decide that you want to impose a tax on, um, property tax on UTVs in your county separately. We're going to say it's property and we're going to tax it at this much. That's not an option for you as a county. Or, hey, we want to impose a tax on all of our residents of $1 to pay for our computers. That's not an option. So just be aware, as far as taxation goes, there is not really a lot of flexibility. You can only tax those items that are provided for in state code. And you'll see them on your budget form. So we're pretty descriptive as far as what you can tax on. So the category of property tax levies, you have general county services. Those are that benefit all county residents. And you have essentially two general rates. You have a general basic rate, and then you have a general supplemental rate that can be used if your basic rate is at its maximum and and you need more revenue to be generated. You have rural county services. So you have two rural rates. And again, the rural rate is to benefit those outside city limits. And again, for the rural, you have a basic and a supplemental. Debt service is a rate that you can use to pay the cost of general obligation debt. And you have other specific taxes provided by law, things like emergency medical services, unified law, and there's a handful of them, and we'll go over those in more detail. I do want to take some time to talk about the basic levies. So what I'm talking about here is the general basic and the rural basic levies. And so these levies are, the most general in nature. Of course, the general basic is your general operating fund and can be used for a variety of different purposes within the county to benefit all residents. And rural basic, similar in nature that it is a little bit more broad in scope, but it's intended to benefit just those outside city limits. So a couple years ago, there was some legislation that used to allow, that struck some code that used to allow counties to exceed general basic and rural basic rates by publishing an extra notice. So back before a couple years ago, your general basic levy rate limit was $3.50 per thousand, and your rural basic levy limit was $3.95 per thousand. If you as a county needed to exceed that rate, you could do so by publishing essentially an extra notice, an extra page of your budget that would tell folks, we need to exceed to this amount, and here's why. So legislation a couple years ago struck that ability to exceed by doing that extra notice. It did allow for, if you were currently over the 350, in the fiscal year 24 budget, you could carry that forward when a new maximum would be calculated for fiscal 25. So essentially, moving forward, your general basic and rural basic rates are calculated based on what you had levied in the prior year. And if you wanted to exceed, like I said before, you used to be able to publish an extra notice to do that. At this point now, when we determine your maximum basic levy, you can only exceed that if you have an election to exceed it. So this legislation then provided a mechanism to reduce your levy rate and kind of shave off the amount of growth you could capture based on where you were at in taxable valuation growth. So if you met or exceeded certain percentages of growth, then your growth would be, your ability to capture that growth would be reduced. And so again, as I mentioned, the rate each year becomes part of the calculation for the next year. And the way the current legislation that's in law now reads is that it will go back to 350 and 395 in fiscal year 29. So if we're talking about those rate calculations for fiscal 26, the budget you're going to be doing, your levy is constrained, your growth is constrained by 1%, 2%, or 3% each year, depending on a trigger hit. So essentially what we're doing then in this calculation is taking a look at your current year value, non-TIF taxable value, so the amount of value that your general basic rate is applied to. What was the amount of value in the current year that you were able to tax against? And then we know the 26 values have been filed. So what is the value that can be taxed against in 26? And how much did it grow? Was there growth? If your growth was under 2.75%, then there is no reduction factor applied. You can essentially obtain the amount of growth that is available to you. If your taxable growth was over 2.75 but less than 4, there is a 1% reduction factor applied. So essentially 1% is shaved off the amount of growth that you could get. If you're over 4% but less than 6, it's a 2% reduction factor. And if your growth was over 6%, there's a 3% reduction factor. So just keep in mind, this is a way to sort of limit or shave off the amount of growth you're able to capture with those basic levies. Now, it sounds like a lot of math, and it is, but DOM does do the math for you. The budget forms make the calculation for you once the county valuations are submitted. So if you log into the system, into our budget system, and you pull up your budget and you go to the property tax tab, you'll see a calculation that looks like this at the top. And this is telling you what your new maximum rates and dollars are for the budget year. So I like to use this example because it kind of shows both ways. And this is Dallas County. So just sort of if you're curious, they show, growth and then not so much growth in two different categories. So if we looked at their general basic, so their county-wide value, and we compared their current year value and the budget year value, the 26 value is shown further down on the actual tab itself. But if we compared the value that they have in this year to the value that they'll have for the next year's budget, their growth was a little bit over 7%. So then what that means is that they're subject to a 3% limitation factor right here. And what that does is it reduces the amount of revenue they're able to capture, essentially, to about 3.95%. And it does that by lowering their rate and their dollars that they're able to capture. So instead of being able to capture 7% growth in value by keeping their rate the same, they're forced to lower their rate and only capture 3.9% growth, 3.95% growth. Okay, so if we look at then their rule basic, and this one kind of shows you a few different things. So their rule basic growth, their growth in the current year to the budget year was less than 1%, actually less than 0.5%. So not a large growth in their rule value. So they're not subject to a limitation. Now, if their rule basic rate was 3.95 or say $4, what this would mean is that they could keep their rate the same. They could keep their rate at that 3.95 or 4. They could keep their rate at what it was. But since in this particular case, they were levying less than the maximum of 3.95, they could actually go up to a maximum rate of 3.95 since they were levying just at $1.91. Not that they would do that necessarily, but statutorily they could. Keep in mind what we're always going to calculate for you are your maximum rates by law. That doesn't mean that's, that you still have the ability to decide, I know we could go to 395, but we're going to keep it at the 191, whatever would be decided by the elected officials. So that's the calculation of the general rates. And again, if you haven't went into the online system and looked at your budget, that's a good thing to go ahead and do. You log in there, pull up the property tax tab, and you'll see that calculation right at the top. And that will tell you what your maximum rates and levies are. Now, if you're not understanding what that means or something, it just needs some more explanation, certainly let me know. Supplemental property tax levies. So for both the general and the rural, there are supplemental levies available. They're limited in purpose, but they're not rate limited. So for general county services, you'd find the allowable uses in 331-424. It's also listed in your budget instructions. Some of the common reasons why the general supplemental is used is for things like elections, FICA, IPERS, health insurance benefits for those that are paid out of the general fund, etc. And then there is a supplemental for rural county services. That's again for FICA and IPERS of those rural basic employees. and for aviation services. In order to use the supplemental rates, you do need to be at your county's general basic or rural basic if we're talking about the rural supplemental at those rate limits. So, for instance, if Dallas County wanted to use the general supplemental for their general rate, they would need to be at that $2 and 59.099 cents. So they would have to be at that rate in order to use the general supplemental. Debt service is a levy that is available to counties. It can be used to pay certain judgments. So if there was a court case that was against the county and you had to pay a certain judgment, that would be an allowable use of the debt service fund, the debt service tax rate. Use it to pay interest and principal on general obligation debt, certain lease or lease purchase agreements, the cost of a joint city-county building, the lease cost of that. Within the budget forms, there is a long-term debt schedule. That is where you would list out your county long-term debts. And if it is a general obligation debt, you would indicate if that debt is being paid from another source or if you're actually going to levy tax for that debt. So just keep in mind if you have debt, you need to complete that long-term debt schedule and you need to indicate if that debt in the budget year is being paid from a source other than property tax. Cemetery levy, this is a levy limit of essentially 6.75 cents per thousand to repair and maintain cemeteries under the jurisdiction of Board of Supervisors. So this is accounted for and levied within the general fund. It's not part of the limitation of the general basic, it's outside of that. And any given year, there's about 20 counties that use this levy. So it's just a way to generate some extra revenue specifically to help pay for the costs of those typically like pioneer cemeteries where maybe no one has been buried for a number of years to pay for the cost of maintaining those particular cemeteries. Emergency services levy is in the instance where a county provides fire protection to a township. The county establishes a fund and then certifies taxes sort of on behalf of that township to exceed it's the regular township levy. So it's essentially the county levying on behalf of the township. Currently, this is only in place in Polk County. So this is sort of a unique circumstance and not applicable to most folks other than obviously Polk County. But it's essentially the counties just levying on behalf of the township and then providing them those funds. Unified law is an option under Code of Iowa 28E. It's essentially where there's agreement within the county to establish a district and it's service sharing for the purposes of providing law enforcement and public safety within that county. And Osceola County has had a countywide one in place for a number of years, and I'm sure there's other folks that have looked into this option as well. The county levy is on property outside of the incorporated area and is limited to $1.50 per $1,000. And then if there's cities, part of that, then they have their own separate levy. And then that revenue would go to support this 28E agreement. In order to put in place this particular levy, there does need to be a vote, and there's several things that need to be considered if you locally are interested in going down that route. So you'd want to look into it. You'd want to look into 28E, and this is particularly in 28E 22.
Couple questions come in.
Yeah,
The first one is on the cemetery levy. Do you have to use that rate or can you be lower?
you can be lower.
Oops. And then second one here says if we are going to transfer unspent proceeds and interest from our capital projects to debt service and then reduce the levy, asking for the rest of the debt payment is that page of long-term debt where I separate where the money came from to make the debt payments.
Right. So you would show, say, if you're paying, say you have a $100,000 principal and interest payment, and you have $20,000 of, extra sort of fund balance or extra proceeds to pay down that debt. Um, on the long-term debt schedule, there's a column that says amount paid from other sources. So in this case, you'd put that $20,000 in the column that's amount paid from other sources because you're paying it from, not property tax. Essentially, you're paying it from funds on hand, right? And then you'd put the 80,000 in the amount to be paid from the debt service. So you'd only be levying or, getting from property tax $80,000 of that payment instead of the full amount. And if that individual has any questions when they're on the long-term debt schedule, they can just let me know.
I did have one come in the Q&A. It's kind of technical. Would you mind looking at that so we could
Oh,
get a
sure.
response? Thank you.
Yeah. Let me oops. Um, oops. Sorry. I guess I am not, I'm only seeing the chat.
Um, I can read it. That's no problem.
Oh,
It
wait a
said,
second. Oh, I'm sorry.
no,
Okay.
you're good.
Yep, I found it.
Perfect.
Sorry. Okay. So, okay. So we're talking about sort of that requirement again to levy at your maximum in order to use the supplemental levies. So in this case, both general basic and rural basic are not reduced. So essentially, to continue to use both supplemental levies, do we have to levy at the 3.5 for general and 3.95 for rural, or can we choose to use the reduced levies from 25? So, Terry, I can't, for some reason, I'm not remembering which county you're from. Why don't you send me an email? Because I'd kind of like to look at your individual budget so I can make sure and answer that one correctly. I want to kind of look at what your fiscal 26 levy limits are. And so just send me an email and I will follow up with you. Okay, so flood and erosion control levy, this has been in statute for a long time. It's not really used, and I think there's been some attempts to make it a little bit more usable. It is in statute if anyone wants to investigate it, but I think there's been some sort of challenges with being able to put in place that levy. Emergency medical services, this has certainly been a more widely used levy in the past handful of years. They did some legislation a couple years ago to make it more usable. If we're talking about a countywide levy, it's authorized under Chapter 422D. And I know there's some folks that are levying for it for the first time they had elections, it requires an election. They had elections and they're levying for it for the first time in fiscal 26. If that's you, then just make sure you send me an email with your just your ballot language and your abstract of votes, so I have that for my records. But again, it's for provision of emergency medical services, and there are certainly some counties that have pursued it, within their own area. So if you have questions, let me know, or if you are putting it in place for the first time in fiscal 26, let me know. So I did want to share too, just as sort of a resource, if you're curious about what other counties may be levying or have levied in the past, if you want to do some comparison of rates or dollars, look at similarly sized counties or what different folks have used. I do have several years of county property tax rates out there. This is just the link to the page where you can find them. There's, city and county and ag extension, everybody's rates are out there just as individual yearly files. So again, just sort of an option if you want to do any research or comparison. And this is what the county one looks like. It just lists each and every county for that year. This would be for the current year. What's the general basic rate? Are they using the Pioneer Cemetery, General Supplemental, et cetera, et cetera? So if you're curious again or looking to do some research or comparison, that is an option available to you. The business property tax credit used to be in place for a long time, and then they transitioned it. Instead of a credit, it's now a reduction in value that then provides a replacement. And so you get a reduction, excuse me, property owners get a reduction in their value on the first 150,000 of their value is valued at the same assessment limitation that residential gets, and then anything above that is valued at 90% for taxable purposes. It used to be called the business property tax credit. Now it's essentially a replacement. It's often referred to as the two-tier replacement because of that. First 150 is this, and then above that is 90%. So just keep it in mind. This is a reduction of value that is already seen within the value that you're taxing against. It is something that there is a replacement that comes from the state to replace some of those dollars. You would budget it under a 2200 revenue source. And fiscal 24 was the first year of it. So you might take a look back at what was received in fiscal 24 just as a way to maybe estimate your fiscal 26 replacement as you budget. Commercial and industrial, if you're new, this is something that was in place for a number of years as a replacement program and was phased out over a period of years by some legislation. So there is a set amount that each county will be getting until it's completely phased out. If you're, if you are curious, what to budget for that amount as it's being phased out, you can go to this particular link. And this is also in your budget instructions, guys, so you don't need to, note the link right here. But just a resource for you as you're budgeting the receipt of those replacement dollars. There are
I have
two,
a couple more
oh yeah,
questions. Is that
yeah,
okay?
yeah, absolutely.
What was the max levy for Pioneer Cemetery?
It's 6 3/4 cents.
And then if your general basic levy is limited by growth to be less than 3.5,
Uh-huh.
can you still use the supplemental levy?
Yes. So whatever your maximum is, if that we tell you fiscal 26, your maximum is $2.50. If you levy $2.50 at your maximum, you can use the general supplemental.
And then we're just approaching 2 p.m., so you got about 30 minutes.
Okay, well, let's plug right on.
Thanks.
There are two exemptions that reduce value that were new for fiscal 25. There's a homestead exemption. For 26, it's an exemption amount of 6,500. So again, that's already been taken off of your taxable value, but it's just something to be aware of, and you don't receive state replacement for that. Military exemption has been around for a long time, but it was increased to $4,000, and it's no longer funded by the state. So I want to go through the budget timeline, and the last page of your budget instructions include a budget process calendar. And so this is just, an example of kind of the different pieces of the budget process and when you might consider doing those, some statutory deadlines, some recommended things. Just it might be a good thing to take a look at. The challenge for counties in particular, because you publish notice in oftentimes more than one paper, because you have to publish notice in all your official newspapers. So you really got to find out from your newspapers, when do they publish? and when do they need things in order to get it in the newspaper. So if it's a Wednesday publication, when do they need your document in order to get it in that Wednesday newspaper? So you've got to, I do suggest like just pull out a calendar and talk to your newspapers, double check all their deadlines, and then start your counting back, because anytime you have to give notice in the newspaper, it's not less than 10, no more than 20 days prior to the date of the hearing itself. And you have to do 2 hearings. So, but some important deadlines too. You have to, by March 5th at 4 p.m., enter information in the DOM system on the proposed property tax notice page. And it's used for your notice that you put in the newspaper, obviously, but it's also used for that budget statement that county auditors get to mail out to taxpayers. So by March 5th at 4, you need to make sure that that page of your budget is completed. If you or a city don't get that completed, then beginning with this year, you're actually penalized and limited to the prior year's budget amount of taxes. So pretty important deadline to make sure that you reach. Again, last year this wasn't a problem. It's not usually a problem with counties. Just a reminder. March 15th is when county auditors mail out that proposed property tax notice. And we're going to, touch on that in more detail sort of separately, just because this, what we're talking about today, really is your budget. No earlier than March 20th is when you hold that hearing on that notice that was sent out via mail and that was published. So this is where you tell people about your proposed property tax. April 30th, you have to hold your second hearing on the full budget, giving that proper notice, and you adopt your budget. Your Board of Supervisors adopts that budget by resolution. Again, proposed property tax hearing, that's your first hearing. Notice has to be published. It also has to be placed on the local government's webpage and social media if you have those. And it has to be on there on a date no later than the date of publication of the notice. So you can toss it out there, ahead of time. It's going to be in the paper on Wednesday. You can give it to your IT folks on Monday and say, hey, just make sure this is on the website by Wednesday. So this hearing notice that county auditors have to send out includes information on the county's hearing as well as the city and the schools. It provides a variety of pieces of information. And again, I don't want to get into too much detail because it's an involved process on its own, but we're really providing you with the data that goes into that mailing. DOM is providing it. Either we're calculating it or we're pulling it off of our website and providing it to you. And again, we'll go over it in more detail at a later time, but it includes all the dates and places and times of those hearings. Includes, some comparison information for folks. If taxes are going up, then that local government, city, county, school has to provide the reasons. And include some examples of the impact on residential and commercial properties, et cetera, et cetera. Couple things about this hearing: it cannot occur during another meeting. So it is sort of in its own sort of window, right? It's separate from any other meetings and you can't do any other business. You don't take any action after the hearing. The hearing is really just an opportunity for people to say, okay, what are you asking for in revenue, in property tax? And we agree, don't agree, whatever. You don't take any action on it. It's just simply a hearing. One thing to keep in mind, though, is whatever you publish for that notice and in that mailing, whatever you publish that you're going to ask for, you're proposing to ask for revenue in tax, you can decrease from that as you go through the rest of the process, but you can't increase when you adopt your final budget. So hold that first hearing, you hear from your citizens on, how they feel about your proposed tax. At that point, you proceed with the budget process as always. Um, you set a date for the public hearing on the full budget. You publish that notice in the newspaper, not less than 10, no more than 20 days before that hearing. You have that hearing. There is some information on the notice itself about the process to protest a budget. It is included in your form automatically from us. Again, you got to do it in all your county newspapers, not less than 10, no more than 20 days before the hearing. And when you do adopt your budget, again, you can't increase tax from what was proposed at the first hearing. And at this hearing, you can continue to go down, but you can never go up. And also expenditures. You can't, in your hearing on the full budget, you're going to publish your proposed expenditures, and you can't go up from that in your final budget. Obviously, your public hearing is where you have a chance to communicate to your public your overall budget. People might have different approaches for those hearings. You might do graphs and charts, comparing, you know, different different things that are going on, talk about, different projects that are going on. But it is, of course, your opportunity to communicate to the public about your budget and the reasons for any tax levies and expenditures. You adopt the budget by resolution, and that is April 30th. Okay, so you've heard me mention the deadline several times. And the reason being is that if you miss that deadline, you're limited to the prior year's tax amount. Now, it used to be that we could, and when I say we, I mean the director of Department of Management would, you could send in a letter and ask for an extension based on circumstances beyond your control. So we didn't get a lot of strange requests from counties. I don't want you to think that. But what was determined through legislation is that instead of it being sort of a vague beyond your control for cities and counties, so cities and counties, now you could only have a budget extension for the reasons that are listed here. Essentially, a newspaper failure to publish as you asked them to, a public emergency or weather-related events that would cause you to have to cancel your hearing, illness, unexpected quorum, unexpected vacancy that caused you not to have a quorum, or a failure of the state software. So obviously, if our system crashes, we're not going to hold you to that. So just bear this in mind. There really is no flexibility for our director to give you extensions. Um, it has to be one of those four reasons. So don't assume that you can just request an extension and, you know, have an opportunity to have one. It's only for those reasons now. And so if you have a situation, and this is really more specific, the first bullet point is really more specific to cities. There are sometimes cities that don't levy in a year. Um, and there's some of the little cities get a little bit complicated. Um, but essentially the tax can be collected but not distributed until they actually get that certified budget into the county auditor. Again, this isn't a county situation, but as you work with some little cities, you might have folks that really push that deadline to the brink. And again, if you are in this situation, you're penalized, you still have to do a budget, as I mentioned. But you also are held to the prior year's tax dollar amount, not rate, but dollars. Budget protest deadline is May 10th. And I already mentioned that your notice tells folks where to go for more information on protesting a budget. The protest process is covered under Chapter 24. It does require for county budgets that people have at least 100 signatures on a petition. So keep that in mind too. This for counties at least, there does need to be at least 100 signatures on a petition. If you get a petition into the county auditor's office, because that's where the petitions go, certainly let us know. You can contact me, you can contact the state appeal board contact. and just alert folks that a protest document was submitted, because that's going to be forwarded to the state appeal board. The state appeal board then is going to schedule a local hearing and gather information and render a decision on that protest. So if you have a protest that's being discussed or you hear something, you have questions, just let me know.
Good for a few
After,
questions.
yeah,
Okay, first two are about those March deadlines.
yeah.
Is March 15th the deadline or the notice needs to be mailed by that day?
Okay, so the notice needs to be mailed by March 15th. You might, because the deadline for the information submission is March 5th, you might be able to mail before, in between March 5th and March 15th, if that makes sense. You might, but it has to be mailed by March 15th.
And then if the mailing date is the weekend, do you have to have that mailed before or after the weekend?
Well, so, I mean, mail doesn't go on a Sunday. So there's not really, I mean, anytime there's a statutory deadline and you can't do that action on that day, I mean, mail goes on Saturday. So unfortunately, I think an argument could be made that you would need to mail. Um, you could certainly mail it on the Friday though, because you can mail it before, just not after. But if the day itself fell on a Sunday, I think you could mail it on the Monday because you couldn't technically actually perform it on the 15th, if that makes sense, if the mail doesn't go on Sunday.
Okay, and the next one, if you have two newspapers and one leads to publication, do you have to redo the process?
Yes.
And last one, are the city schools aware of the March 5th deadline to have their information in the system?
Yes. Yep. So just like I'm talking to counties, Ted is talking to cities, and John is talking to schools. So yeah, DOM is reaching out to those folks and making sure that they know.
Those are all we have for now.
Okay, so after the budget is adopted, the board appropriates by resolution, and I kind of talked about that earlier, just underscoring that without an appropriation, expenditures are not authorized, so it is required, and you can't, a county official can't expend more than they're authorized to via the appropriation. Departmental appropriations can be increased or decreased, and that doesn't require a budget amount unless that's going to push over, in total that major expenditure class. Department appropriations, if we're talking about decreases, if it's more than 10% or $5,000, they're not effective until there is a public hearing on that reduction. So keep that in mind too, just a couple things about that process. A budget amendment is, something you do in the current year, and it's required if, say, you budgeted to expend $1 million in the public safety class, um, and that class of expenditures, and you realize, oh no, we need to purchase a new vehicle for the sheriff's department that we didn't budget for. Something comes up. So you're going to go over the amount that you had said in your budget. If you go over or intend to go over the amount that you had budgeted in that expenditure class, you need to do an amendment. They require the same notice and hearing procedures as the original adoption of the budget, just that full budget, one hearing, full budget hearing and adoption. And it does need to be effective before the expenditure amount is actually exceeded. So it does, you do want to keep on top of that and make sure to communicate with your departments and know that where folks are and if amendments are going to be needed prior to the end of the year. You can amend up to the end of the fiscal year. The only thing you get into if you try to do an amendment after May 31st, and somebody protests your amendment, which they can do, it doesn't happen that often, um, there's not enough time before the end of the fiscal year for the state appeal board to come in and render a decision on that amendment, so it would be void. So just keep that in mind if you might amend during, sort of the end of the year. The budget amendment form is completed in our online system. Essentially, if you're amending, in the current year, you pull up that fiscal 25 budget and you'd see a button that says amend, and you'd click it and it generates a one-page amendment document that you'd have to complete. So I'll take a little bit of time now to go over just the budget system itself. It's a, one system that you use for all the things. So if you've already got access to it for valuations or any other reason, that's where you do the budget system, your budget process too. When you're in the system, you can navigate using the arrow key or the tab key. If you are looking at the screen, if it's a blue cell, you can type into it. If it's a white cell, you can't. It's either pulling from another source or it's a calculation. So just a couple things there. And ending fund balances are produced by subtracting the sum of all expenditures from beginning balance plus revenues. So just if you're curious how an ending balance is arrived at. Again, online application that you do all the things with with us. One login there and you can access valuations, current year budget amendments, all the things, your budget itself. And it's on that county resource page. When you go there, you're going to see this. And of course, you click that login and you use the Enterprise A&A account ID and password. If you don't have one or you want to, have another staff member added, just send me an email and I'll tell you how to do that. You're going to see when you go to the budgets, you'll see the current year budget and all the other budgets that have been completed in this system, as well as the new fiscal year 26 budget. And to get into the budget itself, you click edit. So you'll see at the top these tabs, and these are just essentially different pages of the budget form. And so you're pretty much going to complete all of these. If you don't have any debt, then you wouldn't complete the long-term debt schedule. The exceed general and rule tab is only in those situations where you had an election to exceed your general basic or rule basic. Otherwise, you just ignore it. The proposed tax notice, again, this is going to be the first thing you do. You got to do it by March 5th. You'll note that a lot of the data is being pulled into there for you. So like I said, if it's white cells, you're not typing anything in there. It's being pulled or calculated for you. Blue cells you enter into, right? So your website, your phone number. The property tax notice page, because it's a comparison of current year to what you're saying you want to do in the budget year, we have all your current year information, right? So because it's in our system from last year this time. So we populate that all in there for you. You work on that property tax tab in the budget. That's where you're going to input how many property tax dollars you're asking for, and it'll pull that over for you. So a lot of this hearing notice is already populated, and you complete it by putting in your proposed tax asking. And when you're done with it, at the top, there's a tax notice proposed where you're going to enter in that hearing date. And again, this is very important. Got to have it done by March 5th because it's also used for that mailing. You can enter, as you're working on that piece of it, you can enter all of your revenues and expenditures on the other tabs. You can enter, the budget itself requires the actual year data, from your county annual financial report. You enter in the current year data. You can plug all that in whenever you're ready to. But the only thing that needs to be done by March 5th is the information for that property tax notice. So you can enter in all of that supplemental information, but you can't have that second hearing until after that first hearing has been completed. You can't, propose and publish notice of that second hearing until after that first one's been done. So the system won't even let you propose your full budget hearing until after that first one's done. It'll gray it out for you, so you can't click on it, is what I'm saying. Again, everybody filed their values, so that's all populated in the system, and that wouldn't change. If you do, as a county, find that there's something wrong in your values, contact me. But if we talk about it, say in the next week or so, and we're like, oh yeah, you need to correct your values, or you got a court case that reduced somebody's value by $2 million, okay, let's reflect that in your values. It's still early. Um, if you're in that sort of situation, let me know. If you are in a situation where you need to update your values, you're going to unfile, make your changes. And during the time that you're in unfiled status, everybody's budget will have this notice at the top, just so everybody knows that the values might change. And then you'd file again and it would update. File your values again and it would update. When you're in the budget, you can always check errors. We do say, please save often. You can print the full budget at any time. You can print the current tab at any time, just the page that you're working on. Once you propose your budget notices, you can print the publication notice off. You save it to PDF as your destination, so you can have it on your desktop, or you could print a hard copy. That's up to you. When you check errors, you might see warnings or errors. Your errors will be in red, and that will prevent you from, publishing your notice. It won't let you move forward if you've got errors. If you're error free, it'll look like this. It'll be green, and you can move forward with your notice. When you click the proposed publish, that's where you're going to enter all your information about the hearing itself. In the meeting location, you can plug in your electronic meeting option, your contact information, etc. Again, it generates that notice that you can have available and print off to your machine or email it to the newspaper. Following the public hearing, your board would adopt the budget. If they say, hey, we decided we were asking for too much in tax based on what we've heard from our citizens, so we're going to actually decrease our tax from what we had published. So if that's the case, you'd return it to draft, which just opens up the budget to make edits. You make your changes, save it, you propose publish it again. Although you're going down, you don't need to publish notice again, but that just finalizes it, moves it forward, and now you can adopt. When you adopt, you enter your adoption date and the resolution number and click adopt. So at that point, your budget is adopted. You get that all done by April 30th, and then you file documents with the county auditor. Yes, the county has to file budget documents with the county auditor. So whether that's, different persons in the office or a budget director filing with a county auditor, what have you. You need to file 2 proofs of publication, one for your proposed tax notice hearing and one for the regular budget, full budget hearing. And you need to produce the signed adopted budget and supplementary pages. Also, oftentimes we suggest you file the budget resolution too, just to keep it all together. Now, sorry about that. Beginning with this year, we have an option, and it's not required, but it is an option that you can, and anyone else that does budgets, cities, schools, whoever, can upload those documents into our system, and then the county can then download them in order to do certification. So, as the person completing the county budget, When you look at your budget on the main screen and it's got the edit and that sort of thing, you'd go over far to the right and you'd see a documents button. You can see it in there now if you were to look. It's on the far right beside your budget. You click on that documents button and it's going to tell you you need to produce a signed budget, first hearing notice, property tax, for the property tax asking, and then the second hearing notice. Now, because you guys have more than one notice, more than one newspaper notice that you have to provide, you're going to need to put them together and upload them as one document, right? So if you have to publish in two newspapers, you're gonna have to stick them together and scan them and upload them there. Um, so anyway, in order to upload those documents, they do need to be in, say, a PDF or a JPEG. They need to be legible. You would click on choose file. It would send you out to your machine to find where that file is, and you'd click on it. And then once your document is selected, you click the upload button. If it worked, it'd tell you it was successfully uploaded. If something happened and say you needed to republish, you'd go in and just overwrite it with a new document if that was the case that would happen. Again, this is an optional process to use. You can still do a hard copy and you're still going to see people, your townships or whoever still might provide you with hard copies, little cities, but it is an option that is available. The documents do still need to be uploaded by April 30th, and we have the ability to timestamp these so we know when documents are uploaded or if they're replaced. So there is sort of a chain of command or trail that we can follow with these documents. Again, for certification purposes, we're going to talk about this in more detail at the February 27th workshop. So just kind of bear that in mind. But as the county, completing the budget, this is how you can submit your documents if you don't want to go through the process of, handing over hard copies. So there is my contact information. We've got a little bit of time left if there's some additional questions that folks might have.
We did have one come in
Yep.
here. Um, is it allowed to set the public hearing prior to March 5th?
To set the public hearing date. I mean, you can't have the public hearing prior to March 20th, but you could determine the date before that, if that makes sense. So the earliest you can have that first public hearing is March 20th. But if you know, I mean, when you know when the date is, you can set that date. I mean, you basically would need to know your date because it has to be entered into the system by March 5th. I'm not sure if I'm answering their question. But they can, if that's your question, certainly follow up with me if what I'm saying doesn't make sense.
Sounds good. I don't see any others coming in.
Okay.
Oh,
Well, certainly call me or send me an email if you have any questions. Again, for the county auditors and staff that have to do the certification process, you'll hear from us again. And I believe that both Ted and John will join me for that presentation because, they deal with questions regarding certifying school and city budgets in particular in townships. So we'll be talking specifically about the certification process at that point. And we'll also talk more about the budget statement process and provide some specific instructions regarding that part of that process a little bit later as well.
we did actually have two quick questions come in.
Oh, sure.
First one is, are we to budget for mental health patient advocate?
So this is interesting. So the way I understand it, and I have been in contact with HHS and um, also I'm working on setting up a meeting with the Auditor of State's office just to make sure we're all on the same page. if the way I understand it now, mental health services will be provided, administered, I should say, by the one agency that the state has selected. And there may be situations where counties have mental health advocates that that agency will be reimbursing you for. That's my basic understanding. When the budget instructions were done, no one knew at that point because the contract wasn't awarded. So what we did is we left in, similar to how you would have handled the advocate when it was a regional system, there's an expenditure line, and I'm not remembering, but it's in Service Area 9 for reimbursable MHDS expenses. So my understanding is that you're likely going to budget that expenditure there and also budget, excuse me, an offsetting reimbursement to that expenditure. Also there in the general basic, right? So it should offset the expenditure and then the reimbursement from the administrative services organization, I think is the letters. I don't believe it's going to be a prepayment like your region may have been doing. So it's a little different, but that's my basic understanding now. I am coordinating with HHS and the Auditor of State, and I want us all to be sort of on the same page, and we'll follow up with a little bit more detailed explanation. But that's my understanding. You'd sort of do it like before when it was under the region, although you may not be receiving a prepayment.
Okay, and then quickly, if they upload their documents, they don't need to bring in the originals?
Right. And one thing I would say, they got to be legible. If you're getting a proof of pub that just like you can't read it, you need to let them know, hey, this isn't going to suffice. You need to send it to me, drop it off at the office, or try to upload it again because I can't read it. So you'd only need, if you can't read it, definitely get an original or something. Otherwise, no. And then also with the budget, and I think we'll probably just knowing folks and it's new, we'll probably have some people that only upload their signed page. It does need to be the full budget signed. So just watch for that. I mean, we'll definitely kind of work with folks, but they shouldn't need to provide you with anything additional if what's there is getting you what you need. And we'll do our best again to train folks up on this new process if they want to use it. It's certainly, especially with proof of publication, and sometimes, people have to wait on that and it's just a whole hassle. Hopefully this will be a good benefit to all parties and make it a little bit easier.
Right. Okay, and then last one, will those
Yeah,
uploaded documents stay with the online budget so they can be viewed in future years?
no. Excellent question. So it's going to stay there for until the end of that fiscal year, and then we'll wipe it because we just don't have the storage capability to keep it there for future years. So what we'll do is we'll alert counties, hey, we're gonna, do our new year and get the old documents out there so we can provide new documents. So that way you guys can download them to your own system. So yeah, really good question. We hadn't really touched on that, I don't think, with folks, but they'll be up there obviously through the end of the fiscal year, but we're not going to be able to keep those in perpetuity. We just don't have the storage space, but we'll alert folks, and then we'll remind folks like, hey, if you want those documents, you're going to need to pull them down. So
Great. Well, thank you so much, Carrie. Appreciate it.
no problem. And again, folks, just let me know if you have any questions or anything I can help you with.
Wonderful. Thank you so much. Have a good one.
You too. Thank you.